Today, we are honored and privileged to have Bluestone Resources presenting on the 49 North virtual platform. And Bluestone Resources is advancing the permitted and high-grade Cerro Blanco gold project in southeastern Guatemala. And today, presenting for them is their president and director, again, Darren Klink. Darren's previous experience was 10 years, I believe, Darren, at Oceana.
That's right. Yeah, at Oceana Gold. That's right. Yeah.
At Oceana Gold, 10 years as EVP and head of corporate development for Oceana Gold. And we're really, really happy to have him here. And so with that, over to the great Darren Klink.
I don't know about that. Thanks, Matt. Great to be here, and welcome everyone in the Bay Area to hear a little bit about Bluestone Resources. My colleague Stephen Williams, our Vice President of Corporate Development and Investor Relations, is also joining me on the call today as well. So we'll kick it off. Stephen's driving the Prezzo, and as Matt said, I mean, we're happy to take questions throughout the presentation by the type function, or at the end, as many questions as you want. All right, Stephen. So the slide number 2, the obligatory forward-looking statements, which says that I will from time to time be making forward-looking statements as we move through the presentation. And this is just kind of a quick overview. So Bluestone Resources, we really put the company together 3 years ago on the back of an opportunity to acquire an asset from Gold Corp at the time. That was, of course, prior to Gold Corp being bought out by Newmont, on a high-grade, permitted, low sulfidation epithermal deposit in southeastern part of Guatemala. It had more than $200 million invested in it over the previous 10 to 15 years. It was permitted, 10 gram per ton deposit, and effectively a 10, 12, 13-year head start. And the reason that Gold Corp was parting with it is effectively it wasn't big enough. We've been able to upgrade now the resource to 1.4 million ounces in the measured and indicated category at just over 10 grams per ton. But at the time, Gold Corp was focused on larger sort of camps, and also their operating mine in Guatemala, which is about 10 hours away by car, was moving into a care and maintenance phase, and so it wasn't a priority for them to stay in that particular jurisdiction. So we picked it up in 2017, focused a lot on the technical, on the geology, on the drilling, delivered a feasibility study last year, and now this year we undertook a financing earlier in the year, which was completed in May. We're right in the midst now, just in the process of finishing the optimization. We're into basic engineering. We've got our project team pulled together, and we'd be expecting to start in early works on the construction phase later on this year. So this is one of the highest grade undeveloped gold projects in the world today. And unbeknownst to us, the gold price is actually going up as well. So it's getting actually better and better. Next slide. So the corporate structures you see here, as of the 1st of June, you can see a pretty tight shareholder structure. So there's 140 million shares out. We've got 60 million US in the bank. So on an EV basis, you see there about $120 million EV. You'll see a couple of slides a little bit later as we get into the project itself, but I want you to remember a particular point here when you look at the enterprise value of the company. This project at today's gold price will generate more free cash flow in the first year of annual production than the enterprise value of the company today. So keep that in mind as we go through, and I'm sure it'll generate quite a few questions. Good coverage from a variety of brokers and banks in Canada. You can see there's 6 different shops that do cover us, and average target price is $3.50. The stock today, I think, is at $2.15, $2.20. And an important aspect, which has really been instrumental in our ability to continue to move forward over the last 3 years, has been the strong shareholder support that we have. We have a strong group of institutional investors that was bolstered again here more recently when we did the equity financing for the equity component of the development earlier this year. CD Capital out of London has 13%. They've been a shareholder since we first kind of got the company going in 2017. They're based out of London and have been a continued supporter. And also the Lundeen family. Many of you might be aware of the Lundeen family. Jack Lundeen joined us earlier this year as the CEO to work with myself, Stephen, and the rest of the executive team. And the Lundeen family has really more than four decades in the metals and mining space all across the world. And of course, Lundeen Mining, Lundeen Gold, a couple of companies that you'd be familiar with, have been very successful, and they've been a big supporter of Bluestone. And ultimately, you know, as we move forward and grow the business, I know they'll continue to be supportive of that. Next slide, Stephen, if we could. So this is just a bit of a snapshot that kind of takes us through 36 months in a quick period of time. So as I said, we picked up and acquired the asset in May of 2017. Really, our focus has been on the technical. We assembled a strong technical group, particularly on the geology, and that drove for you know, ended up with an infill drill program, updated the resource, and ultimately the feasibility study, which we came out with last year. Now, late last year, we'd identified in that feasibility study there were a number of areas that required infill drilling that allowed us to increase the resource from inferred into measured and indicated. And in fact, in November of last year, just over 6 months ago, we added another 22% to that measured and indicated resource category. So as we move forward into next year and update, I suspect, the mine plan, you're going to start to see those ounces then come into the mine plan and drive cash flows and obviously enhance the economics even further. I mentioned Jack joined us in January. We're probably 14 months into the project financing process. So we kicked that off last year. And an important part, of course, of these projects is being able to get the finance. We engaged with a number of international, multinational, really, banks, project finance banks. We decided that when we kicked it off, we wanted to go that direction and see what the interest was, and we've had very good interest. And so we're in the later stages of that. I'm going to be expecting to enter into the credit facility later on this year to bring the debt component of the development in, and these are with primarily European banks and export credit agencies.
Hey, Darren?
Yes.
Just real quick, we have a question from Robert.
Okay.
And it is, can you please discuss the opportunities set in geothermal, tough business, but considerable tailwinds from an ESG standpoint?
Yeah, good question. In fact, we've got a slide here on the geothermal towards the end of the presentation, and I will be happy to address that question. Okay. Why don't we just kind of table it? Don't let me forget it, and we'll get to it a little bit later because it definitely kind of interconnects here. Good question.
Not to worry. Okay,
cool. So as I mentioned, just finishing up, we got the project financing. We'd expect to be bringing that and entering into a credit agreement in the second half of this year. And that's an important component, obviously, to allow us to really hit the ground running and get this project built over the next 24 months. All right, so this is a snapshot. You can see the picture in the background. That's the project. So you can see there's two portals. I mentioned more than $200 million invested in this, primarily in the mine, but also there was $60 million that went into the geothermal project that was asked about here just a moment ago. Good infrastructure. You know, we've got water treatment plant. We got 3.5 kilometers of underground development. We got vent raises, two portals. You know, effectively, and you'll see a slide a little bit later, you know, 40% of the deposit is actually above you if you ever come down to visit as you enter into the deposit through the decline. So it's about a 2.5-3 hour drive from Guatemala City down the Pan American Highway. Infrastructure is good, and as you can see, we're largely in an agricultural area. Many of the landowners there the land's been in families for generations. You've got some melon farming, corn, cattle, and this is a small footprint underground mine, due in large part because of the grade. And so you can really see between the south portal box and the water treatment box, that's pretty well where all the infrastructure is going to go for this project. And of course, then as an underground mine, the deposit is in that hill. The land required has already been acquired for some time. And as I said, we're in this optimization and now into basic engineering phases. So this is a video here, which just checking on the volume there, Stephen. I'm not sure. We maybe don't even need the volume, but this is like a 2-minute shot to give you a sense of Guatemala. This is Guatemala City. About 6 million people in this city, in a population totally in Guatemala of about 17 million. It is the largest economy in Central America. And a relatively cosmopolitan city as well. I think most that would agree that it's quite a cosmopolitan city, and more advanced, I think, than many would have expected. 3 hours down the Pan American Highway, as I said, you get down to Ascension Mita. It starts to open up, where Guatemala City is quite rugged, but you can see here we've got a great kind of agricultural sort of plateau, rolling hills. This is actually taken after the wet season, so fairly green, but it does get quite hot and dry there, and you'll see a lot of that green turns to brown. The project, as I said, a lot of infrastructure was in place when we were there, and this was largely Gold Corp, one of the largest and more well-known gold miners over the last 2 decades. Really took an aggressive approach here, but that all sort of went into a care and maintenance phase in 2013. When the gold price came back, there's change in management, and they really pivoted in terms of where their priorities are going to be. They actually tried to find more ounces at their Marlin mine in Guatemala, extend the mine life, and the view here was that this would be complementary in the country, because it would take the 250,000 ounces from their current mine in Guatemala, add it to this, it'd be 150,000. They'd have 400,000 ounces of high-grade production. But unfortunately, Marlin went into care and maintenance, and ultimately there's a change in strategy. You can see there now the hills are a little bit browner. This is obviously taken during the drier part of the year. That's the water treatment plant and some of the infrastructure in place around the water treatment plant at site. And as you can see, very pretty sunsets in this part of the world, with some of the locals and some of the local agricultural ground as well.
Hey, Darren, we had another quick question from Matt.
Sure.
What are the reasons that Gold Corp decided to divest of this asset in the first place? Size, technical issues, geopolitical, all of the above?
Yeah, sure. And primarily size and strategy. So as I was mentioning, they actually, there was 150 million dollars plus that was put in this asset over a period of a decade. And that all came to a slowdown in 2013 with the gold price coming down. And effectively every company, the largest ones out there, in fact, reevaluating CapEx expenditures and where they could trim back, because the gold price had gone from 1,800 to 1,300, and in fact, companies weren't really prepared for it. Their structures were not set up as such. And so on that basis, that time they put it into care and maintenance. And then fast forward into 2015, 16, new management team came in. They did an evaluation of all their assets. The Marlin mine in Guatemala, which had been operating for more than a decade, 250,000 ounces of production, highly profitable, was looking like it needed more work. It was running towards the end of the mine life. They actually took the geology team from Cerro Blanco, sent them over to Marlin, and were driving towards extending that mine life. They did add a couple of years, in fact, transitioned into an underground, but that was it. And so then the management team said, look, we're not going to focus in Guatemala if we've just got a project that's going into closure, which effectively was Marlin, and a development asset, Cerro Blanco, that's going to produce 125, 150,000 ounces. We got to focus on big things. We got to get the management team focused on big things. And so they actually acquired an asset in the Yukon for $520 million. And the chairman of that company, that they founded that company and 12 years later sold it to Gold Corp for $500 million, is our chairman, John Robbins. And so he got to know the Gold Corp guys on that and said, look, down the road, if there's ever a chance you want to sell something, let us know. Long story short, this opportunity presented itself. John had a look, presented a creative offer in the process, and we took the keys. And so that's really how we got our hands on it. And, ironically, despite the fact that both Gold Corp and the predecessors had invested, as I said, close to $200 million over a 10 to kind of 12, 13-year period, we bought it for 18. And there's a $15 million contingent payment that we need to make after it comes into production. So it was a good deal, right place, right time, and right place in the cycle.
Excellent, excellent.
So this is looking at the metrics on it. This is based on the feasibility study that we put out last year, and ultimately is the backbone to what we're working off of now as we move through the basic engineering phase, as we move into a construction phase here over the next 2 to 3 quarters. But as you can see, using a $1,250 gold price, which, I mean, to us was a great gold price when we were running these numbers 18 months ago, this project, as I said, is very robust. Metallurgy straightforward, low sulfidation epithermal, so you can see good recoveries on the gold. It's a small throughput, 1,250 tons per day, because you've got the grade, right? As I said, I mean, this is 8 to 10 grams per ton. It'd produce on average about 115 to 120,000 ounces of gold per annum. But over the first 3 years, closer to 150,000, really just based on the schedule, at an all-in sustaining cost of less than $600. So at today's gold price, which I think is right around 1,800 bucks, you know, you have a $1,200 margin. This asset will pay itself back in just over a year, and an IRR of as you can see, at $1,800 gold, it approaches 70%. It really helps to be able to get those head starts. And in our case, we got a 12-year head start and a lot of sunk capital to get us to this stage. Next slide, Stephen, thanks. This one looks at the cash flows, and I kind of alluded to it early on. And, you know, I guess my personal, you know, takeaway is that, you know, mining can be a tough business, and, you know, it's even tougher if you're trading dollars or you're worried about what the gold price is every day, because that's something we can't control. This project, obviously, you don't have to worry about that, because we, you know, as I said, we're going to produce gold for around $600 an ounce, and I'm quite confident, at least for the next number of years, gold price is not going to approach anything close to $600. But you know, the free cash flow generation here is something that's pretty special. And so our ability then to get this mine up and going, you pay back the debt very quickly. It creates opportunities then for growth, and I suspect even, you know, for dividends, you know, fairly early in the longevity of this asset. So it's a great platform as a business, and with the Lundin family and Jack's, you know, support and vision, this is really a good start to growing what we think is a high quality gold company. With, as I said, one of the highest grade undeveloped gold projects out there in the world today. The resource and reserves, I talked, probably the key catalyst here was we added almost 20% to the measured and indicated in November. And this was really just, you know, through infill drilling, moving the inferred into indicated. This is a vein deposit, so that's one of the things you really need here is quite a bit of drilling. My past experience when I was with Oceana Gold involved in New Zealand, we had acquired an asset from Newmont. That was an asset that, you know, initially had an 8-year mine life in 1988. This morning I see Oceana Gold put out news. I guess this is year 32 now. It's still operating. They put out news and they've got another, what they believe, potential for 15 years there. So these deposits, of course, they're tough to kill once you get them up and going, but they do require a lot of drilling. The good thing here is, of course, when we're finding ounces, these are, you know, 6, 7, 8, 9, 10, 20 gram per ton ounces. They pay the bills in a hurry. That's a picture there from our underground development. So you can see, you know, what a major advantage it is for us as we came to this deposit in 2017. We could walk into the mine, we could see the mineralogy, we could really get in and target our drilling and understand the complexity of the ore body, and then really kind of work through that sort of Rubik's Cube of sorts. You know, the head start has really been a huge help for us. This looks at the deposit and talks a little bit about the infill program. You know, last year and this year we've had really constant drills turning, and the objective for us was there. You know, with the update in November of last year and now currently as well, there was quite a bit of that material that was in blue. If we looked at the screen, you know, call it 12 months ago, there'd be more blue on the screen. But by moving the blue, the inferred, into the measured and indicated, it then gives us the opportunity to put it into the reserves. And if it goes into the reserves, then it drives the economics. Keep in mind that the extra 20% in measured and indicated is not in those economic numbers that I presented earlier, because that came actually after the feasibility study. And so The geology team has really got it honed down as far as where these veins are going, where we need to extend them, where we need to kind of tighten up the drilling so that, ultimately when we update the mine plan next year, when we're in construction, we'll be able to see these ounces come in to the mine plan and boost the economics. A very robust deposit. And, if I was a betting man, although the initial mine life in the feasibility study, 18 months, ago said eight years, I suspect by the time we turn on the mills, we're going to be at least 10. And, if I was betting, I'd say 20 years from now, this project's still very much producing gold, much like, the one I referred to earlier in New Zealand, given the mineralogy and the prospectivity. This slide here actually kind of alludes to that as well. The blue boxes that you see there, those are all holes that actually Goldcorp had drilled. So our focus in the last sort of 30 months has been just in that red sort of ellipse that you see, and you can see the underground development that's overprinted on that, largely because, we knew pretty early on that we had a deposit here that you could build a mine around. It was big enough, it was robust enough. So we really wanted to focus on that and then, get the finance in place and be able to move this along. But as you can see, there's quite a few sort of showings of gold and quartz, both to the east and also up to the north, that Goldcorp had drilled, going back into the, the 2006, 7, 8, 9, 10, 11 period that need to be followed up. So we'll get this this mine in construction and get it headed towards an operation. And then I suspect that the geologists will be looking for some budget to start trying to find the next 10 years of mine life. We're in a unique situation, which many of the investors probably know. We're in this sort of phase as we're moving from developer, then through into construction, and then ultimately into operations. And what a great time. Gold price is strong. You can see the margins on this asset. And this slide here sort of demonstrates, looking at some of the peer companies over the last sort of 4 to 5 years, single asset companies as well. So single asset gold producers that have moved through that sort of development phase into the construction and then ultimately into operations. And you can see the sorts of returns that become quite commonplace in that. Ultimately, a company that's actually consuming cash to taking that cash, investing it, and then becoming, a cash flowing entity. In the case of the list here that we have, Atlantic, Continental, both companies that have been taken out and bought out for exactly that reason. Lundin Gold, where Jack Lundin, our CEO, he'd spent 3.5 years there in Ecuador. That's another Latin American gold project that's done very well on the back of moving through. So that's the opportunity here, and it's the reason why 110% of our focus is on moving Bluestone through that phase. So really more near-term third quarter, G Mining, as I mentioned, we've got the project engineering group engaged and on board. They got involved here in the first half. We're now, finishing up freezing the flow sheet through the optimization work we're doing. We're into the basic engineering and design work. As we get into, the fourth quarter, we'll be starting to place long lead time items for the construction process. Bit of finalization on some of the met test work as well, and then ultimately, we're working through the underground mining contract tender process. We'd expect that to be in place by the end of the year, and the underground mining contractors would be mobilizing probably later on in the first quarter, I suspect. So it is all coming together. There's been some good progress that's been made, and all systems go. So I think, from a catalyst perspective, as I said, the drills, we've actually got 4 drills turning right now. And despite the situation, with the COVID-19 pandemic, we've been able to manage that, working closely with our government partners. We did put them into a slowdown or a stoppage suspension for a period of time, and then have brought them back on board, working with the local partners, government partners on that. As I said, we're in this phase now, optimization, engineering, and design, where once we come out of that, we're going to be then kicking off our early works towards the end of the year, and then into your construction in 2021. We'd expect that, an updated resource towards the end of this year or early next year. You see how that goes. As I said, we've had drills going. Might get pushed into the first quarter of next year, and the project financing, as I said, we expect here in this half as well to be brought in with regards to credit terms, really, and sign into a credit agreement. So that's kind of a broad overview, and maybe this is a good juncture. We could talk a little bit about the geothermal. That's actually a picture of it there that Stephen's got. So the geothermal project, to answer Robert's questions from earlier, yes, it is a little bit of a unique situation. When we acquired the mine, we also acquired a geothermal project, and this geothermal project had about $60 million invested in it. And the main catalyst behind that investment by Gold Corp was that a number of years ago, kind of 2008, 2009, when you had quite high petrol prices, so the oil price, of course, many will remember, had $140 a barrel. Guatemala had a shortage of power, and in fact, there was quite a good chunk of that power that came from coal and also bunker fuel. And probably the most important thing was that the commercial grid that would be necessary to power the mine was about 35 kilometers away from the current mine site. And so at that basis, Gold Corp brought in some New Zealand experts to start to do some exploration effectively for geothermal. And so when we arrived in 2017, as I said, there'd been about $60 million invested, primarily in drilling and engineering studies. We did some flow test work here a couple of years ago, and you can see that obviously we're testing a few of the wells. We got this is through a group out of California that came in, actually not too far from where many of you are sitting, actually in the northern part of California, to help us with this. And then we ran the engineering around it, and it identified that there's probably 5 to 10 megawatts of power potential already sort of identified through the work that Gold Corp did. But what's happened since Gold Corp kicked that work off is that the power grid is coming closer. We're now only 8 kilometers away from the commercial grid. Power prices have come down because Guatemala, in fact, has brought on quite a bit of hydropower over the last 10 years or so. And so a combination of the power price being lower, the grid being closer as well, the necessity to generate our own power is not as important. So we made a decision as a management team to decouple the two projects. Obviously, from a perspective of simplicity, that sometimes is the best sort of medicine. And so the objective with regards to the mine currently right now is that we will run that power line 8 kilometers, tie into the grid. Our backup power will come from gensets, but for the most part, all our power is going to come off of the grid, and spot power prices now in Guatemala are in that 6-7 cents a kilowatt hour range, so quite low power. Having said that, the geothermal opportunity is there as a separate standalone business. At some point, we very well may have the opportunity to produce power and then either sell that into the grid or produce power for the mine. But we're looking at it separately. We've actually got some good discussions going with the government of Guatemala. There's a new power call that's coming out, and we believe some of that will actually be ring-fenced to geothermal. And what we understand in the discussions that Jack and I had with the Minister of Energy and Mines and the Vice President earlier this year is that this is the most advanced geothermal project in the country. So possibly something we might partner on, but we're really 99% of our focus right now is on moving the gold mine forward. So this is probably a good time to answer, take any questions, Matt.
Yeah, very good. Great presentation, Darren. And for folks out there, if you have any questions, again, via type-in or direct audio, voice to audio, please fire away. I know we have one from Chris. Drew, can you help me out on enabling Chris on direct voice to audio? Working on this, Darren, so give me one second.
Chris, you have unmuting available. If you want to click unmute, you're able to ask your question.
Okay, so is Chris out there for a question for Darren?
Just have to unmute. I see Chris is still on mute, I think.
Yeah, he's still on mute.
Yeah. Maybe what we can do, I see there is one that's come through the Q&A. platform. Should we answer that one first and then come back to Chris?
Yeah, that's great. Let's do that. That's
So
from
there's
Aaron.
something here from Aaron. So considering how close you are to production, and I know you mentioned dividends post-production, do you have any plans to look at new assets versus remaining singular focus on one asset? So good question. You know, I think, and this, you know, kind of, this is somewhat personal, I guess, a personal response, but I think is also indicative of, you know, where the board sits. You know, this is such a great opportunity here with Cerro Blanco. I can tell you that, you know, 110% of our focus is kind of on moving this forward and getting into production for all the reasons we saw in some of those tables and charts with regards to the opportunity that exists here for shareholders and our local partners and local employees, obviously, as well. Having said all that, you know, the bigger picture, if we're sitting having this discussion, you know, say 3 years from now, the mine's up and running, is that, yeah, single asset companies, you tend to have all your eggs in those baskets. So we think this is a great platform to grow from, and you know, our medium-term objective would be to look for other opportunities to complement this. But for the near term, I mean, this is where our focus is, and the size of the prize here is fairly significant. So it's important for us to be able to focus on that.
That's great. Thank you, Darren. And then we've got another question from Van, if you can see that.
Okay, yeah, I'll just see you can pull it up. On slide 11 and 18, you show many holes from 20 to 30 grams. Please comment on those high-grade veins. Yeah, thanks, Van. Yeah, so that's right. I mean, in fact, the deposit itself, as is sitting right now in that red ellipse, there are veins in there that, you know, average 20, 25 grams in places. So you've really got a mixture. The cutoff grade right now that's run in the feasibility study is 3.5. And so, you know, we run, you know, everything kind of north of 3.5 grams per ton will make it into the reserve. There's two different mining methods. We've got long hole open stoping, and then we've also got a cut and fill component. But some of the work that, you know, we're doing now, you know, we see there's probably an opportunity that we can go more bulk tonnage. So we'll end up, you know, taking more tons. That'll help us with the cost structure, and we should be able to extract more metal that way. But it's not atypical for these sort of types of systems, these low sulfidation epithermal systems. Effectively, it's gold in quartz. It could be really narrow. It could be, you know, 1/3 of a meter wide, but it might be running, you know, 2 ounces. It might be running 60, 70, 80, 90, 100 grams. If you came into the, and came for a site visit, you'd see veins down there, 1/2 a meter running, you know, 40, 50, 60, 100 grams per ton. So it's not atypical for these type of systems. And I think when you look at that drilling to the perimeter to the east and also to the north, very typical of the same sort of stuff we see when we're in the underground.
Fantastic. And we've got another question from Lawrence there, Darren, if you can see that.
Okay, yeah. So how confident are you that the mine construction will be on schedule? Are there any particular challenges, or should investors expect this to be pretty straightforward? Another good question. I'd be lying to you if I said that mining is straightforward and plain vanilla. There always seems to be something that comes up. So I think it's probably important just to be upright and forthright. There's, and you tend to do a lot of ducking and weaving. Probably the best way to answer this is that it's been so important for us to have this head start for the underground development. You can go in, you can have a look at the deposit, you can see the orientation of the veins, and then the geologists have really been able to do that in terms of then stepping back, looking at the geological model, and then you know, setting up for their next holes, and are probably, you know, 98% sort of hit rate in terms of hitting veins where they expect it to be. From a construction perspective, this is a pretty small footprint. We don't have big pieces of infrastructure, like we don't have desal plants. We don't have, you know, 25 kilometers of roads through tundra or through to the top of the mountains that we need to put in. Those are often, you know, today, in today's world, most of the easy mines have already been built. So now you're in tougher jurisdictions. We're not trying to travel through jungle. You know, in terms of where it's located, to be honest, if this mine was in Canada or the US or Australia, it would probably have been mined in the 1960s or 1970s. So, you know, definitely I think we need to keep our eye on the ball. The one thing from the underground mine perspective is that what's driving the geothermal potential out to the east is that we have quite a high heat gradient. And so we have to manage our water because the water is hot and it's underground. It's not a lot of water. In fact, it's probably drier than most underground mines that I've been in, but the water is hot. So we need to be careful to be able to make sure and extract water in advance of our development. That's what's done for really the first 3.5 kilometers of development already. And we'll continue to follow those processes and as we develop down. The good thing is that we don't have to develop that far. We're only really developing another 130 meters down, and you capture about 95% of the reserves. So this is a relatively shallow mine development, but from a health and safety perspective, without a doubt, we got to keep our eye on the ball.
It looks like we've got another follow-up from Van. How big is the overall land package, Darren?
Yeah, so Stephen, if you take us back to the image, maybe with the geography, so you can see there what's kind of outlined in the color. That's the mining license. So you can see that from a mining perspective, there's plenty of space there to grow. Beyond the red ellipse. That red ellipse is 400 by 800. So, effectively not very big in consideration for the mining license. The exploration license that sits outside of that is a multiple of that size. So, yeah, I think, because we've got a good sense now at the local level what that geology looks like, it's a great opportunity for the geologists then to spread out. We talked a little bit earlier about some of that drilling that Gold Corp's done to the east and to the north, and just kind of starting to follow that up, incrementally, kind of moving out.
That's great. We've got another question here, Darren, from Greg. Yep. This is actually one I was kind of interested in.
Sure.
Well, that I wanted to address was a little bit about geopolitical here and the history.
Sure. Yeah.
As you can read there, the question, if you want to just go through that and
Yeah, you bet. Hey, Greg, thanks for joining this afternoon, by the way. So Greg's asked, Gold Corp continuously battled opposition groups at Marlin. What gives you the confidence Bluestone won't find itself in the same position fighting anti-mining groups funded by outside parties that were successful in closing down Escobal? So good question. And ultimately, we've had 3 years kind of in the country, in and out, to kind of get a better feel for this. I think if we address, the Marlin mine, which operated for 12 years, it's about 11 hours by car from where we are. Entirely different part of Guatemala. It's up in the highlands, not too far off the Mexican border. I think Stephen's going to try and get to a map to show that. And the makeup of the surroundings, I guess, in terms of the people, is very different as well. So on that map that Stephen's got on slide number 6, you'd run pretty well kind of straight west and a little bit north of Guatemala City, and you get up into the highlands area. And so that's, effectively there's a high percentage of indigenous population up there. You don't have the titled land like we do down here. You can see from the screen, in fact, those lines on those fields are pretty straight, same as you'd find in Alberta or Texas, and that's because they're all individually titled land. And that's not the case over on the western part of the country, and in fact a lot of part of the country, in fact in Guatemala. Down where we are, as I said, it's kind of more ranch lands, lands individually titled, and it's been held in the hands of families for generations. Escobal, which is kind of about an hour to the east of Guatemala City. Tahoe, they have run into problems, obviously, and that project was suspended just over 2 years ago, I guess, 2.5 years ago it was suspended. And that was really on the basis of the necessity that the courts felt that there needed to be more consultation with indigenous peoples. I think that, what we've seen transpire since then is that, Pan American Silver's come in and has acquired that asset. They have taken a very sort of conservative approach, ensuring that they're managing expectations, but ultimately as well, the government's on record and Pan American's on record that, look, consultation needs to take place there. The government is actually driving that. It has been slowed down a little bit from the COVID situation, but the expectation is that consultation will be completed and then that mine gets back up and started. In fact, the courts themselves, the constitutional court said, this project, the consultation needs to take place because there is a need to further consult with Indigenous populations in the area. That's consult, it's not a veto power. Effectively, the same thing has shown up in other parts of Latin America, but also in Guatemala for supermarkets, bridges, roads. It's not just mines. And once that consultation is completed, then this mine is back up and going, full stop. So,
and maybe Darren, just talking a little bit about Cerro Blanco's history compared to the history of those other projects.
Yeah, no, that's the next thing I was going to get to as well, is that, you know, when you think of both where Marlin was located and also, you know, the history at Escobal as well. I mean, even in the early days of construction at Escobal, it is up in the mountains. It is more rugged. They have, you know, it's not the same as what you see here from a land holding perspective. Again, it's tucked up in the mountains. The mine itself at Escobal is, the front gate of the mine is right in the back of a local village. There was conflict early on in the construction. This project in Cerro Blanco, and I mean, I'm just speaking from past experiences throughout other developing countries in Southeast Asia and Latin America. There has been no sort of history at all of conflict here. You know, the local communities, the broader communities have been very supportive. They refer to this as our project, and keep in mind that for the last 10 to 15 years, you know, there has been a project here. It hasn't actually been producing gold, but there's been, you know, equipment showing up, underground development, construction happening, people going to work every day with their lunch pails. There was a situation here before we arrived, so it was maybe say 5 years ago, where there was an NGO group that arrived, and this story was told to me secondhand, but by our former GM, arrived in the local community of Ascension Mita, which is kind of, you know, 7 clicks away. It's where we stay when we go there. And they came in from Guatemala City. They showed up at the local school, one afternoon, and they explained to the teachers that they were going to host an anti-mining rally, and they're going to walk from the school out to the mine site, anti-mining. But when the parents showed up to pick up their kids from school, the teacher shared this information, and unbeknownst to the NGO representative from Guatemala City and his friend, the parents waited for them the next morning at the school, and pretty well told them straight on is that the kids are not leaving school to attend the march. They're going to stay in school, and we're all going back to our jobs. If you want to do your march out the 7 kilometers to the mine, anti-mining, you'll be going by yourself, but the kids are staying in school. And so long story short, no march. The next day they left and haven't been back since. So it's not a very hospitable spot. I think due in large part because of the work that Gold Corp did here, and also just the makeup of the people and the good neighbor policy that's been operated here really from day one.
Great, thank you, Darren. Just a couple more quick questions from my side. How long did Gold Corp have the property prior to the sale to you? Was there someone else that had it that they picked it off from, and
Yeah.
how long did they have it?
Yeah, so the discovery was kind of in the late 90s by a company called Mar West.
Okay.
And then they got acquired by Glamis. So everybody would be familiar with the company Glamis. And then Glamis got acquired by Gold Corp in 2007, I think 2008.
Okay.
And then you know, effectively they had it for, I guess, kind of 6 years, did quite a bit of work on it, and then put it into care and maintenance in 2013. And then, you know, really there hadn't been a geologist on the site in 4.5 years when we arrived in 2017.
That's a great deal. That's a great deal. And just one other hit, is there, in Guatemala, is there any other juniors or mid-tiers pursuing deposits down there, or is it just you guys right now?
No, there's nickel mines up in the northeast that are operating. There's a couple of juniors with exploration. In fact, Radius has got a project not far from us to the north, which another company's just earned in on. In fact, they just raised $5 million, I think, for that. That's maybe, call it 45 minutes to the north of us.
Okay.
And they'll, I assume they'll actually be undertaking a drill program there later this year, early next year. And then, as I said, I mean, Marlin historically operated for 12 years. The Pan American asset right now is awaiting restart once the consultation process takes place.
Got it. So one more question from Van.
Right.
On the purchase price.
Yeah. So can you repeat the purchase price? So we acquired this asset in 2017 for $18 million US. And then there's an additional $15 million payment that we are due to Gold Corp, now Newmont, to be made after we get into commercial production. So it's 18 plus in the future 15. Gold Corp retained a 4.9% equity stake at that point, and Newmont has that now. I think the Newmont stake you saw on the previous slide was now about 2% or 2.5%, as well as a 1% NSR.
Got it. Okay. Well, if there is any other questions, fire away. We've got about a minute or two here, but if there's not, I do want to thank Darren Klink and Stephen Williams from Bluestone. What a great story this is. And, you know, a story where you're getting in position and purchasing a package that is permitted, is, you know, close to 120,000 ounces already, and can grow. So I'm actually very excited about this and very glad that you guys joined us today with our constituency, and thank you to all the participants as always. And if there's any questions moving forward, feel free to address myself or of course Stephen Williams, who will be provided with contact information and what have you. And if any feedback is out there, we'll be looking for that as well to provide to Darren, Stephen, and the company. So thank you guys very much. Great job. And have a great afternoon.
Yeah, thanks, Matt. Thanks everyone for joining. Look forward to future correspondence, and watch this space because we'll be in a construction phase here pretty quick on a high grade and developed gold project at a time where you know, the margins are getting better every day.
Awesome stuff.
Very
Thanks
good.
everyone. Appreciate it.